Good afternoon, everybody. My name is Pete Renzulli, bringing you the daily recap on Monday afternoon, November 5th. What can you say today other than it was kind of a muted session? And I guess what I want to do is I want to go into the 15-minute chart of the spiders to give everybody an idea of the intraday price action and how that related to setting up some clarity to put on some trades. You can see pretty clearly here we were within this basically 50-cent trading range for the better part of the day. We only just recently broke out of it at the end of the day. So from a intraday volatility perspective, there's two different ways to take a look at what's going on and how you should have or could have possibly traded today. Obviously, we had the big selling on Friday, looking for follow through today. We got follow through to the downside, but intraday we could never really crack the pre-market lows or the pre-market highs with any significant resistance. We did have one big green candle here, 15-minute window, and one at the end of the day. But other than that, you can see as I talk about using candlesticks, there was a massive amount of indecision intraday, which was backed up by a lack of conviction in trades. The key to what was going on today, and pretty much everybody across the board said the same thing, was lack of trades occurring with any kind of consistency. So it just seems like we had massive selling on Friday in downtrends for the most part, especially in the technology area, and a lighter volume day today. Although we closed near the highs today, I am leaning a little bit more towards looking for today being nothing more than a pullback, which if we look at the hourly chart, you can see here we have a pretty clean flag, push down flag on the hourly chart. Now again, if you are a bullish trader looking for signs that the selling might have dried up after just one day, which by the way, if we zoom out again to the daily chart, red candle, green candle, red candle, green candle. That is not optimal conditions for feeling like you should have conviction. When you're creating your trading plan, you should absolutely have criteria, guidelines, or a structure for price action that tells you this is the optimal conditions and I have every reason to want to be trading a little bit bigger, or these are the reasons I would not be trading bigger. And when you are alternating buying and selling every day without what we call well bid, where there's higher highs, higher lows, or lower lows, lower highs, it's very, very hard to have conviction, which basically translates into trade management that you should not be sizing up. So that being said, the hourly chart, today's price action was a bear flag. The daily chart, we are still stuck in basically this basically an 8-day trading range other than these 2 days we popped out. So right now the right price for the spiders and or the market is 141 to 142. We need to get out of that window and stay out of that window. Getting out of there for one day is not enough conviction. So as I said in the morning call this morning, very, very important to be okay with being on the sidelines if the market conditions are not unfolding for the game plan that you have. So if you have longs and you have shorts and you're getting choppy back and forth action where buying every high is not making money, shorting every new low is not making money, having your game plan to have a little bit of discipline to step aside until you get a pause outside of the range on whatever time frame is your main time frame. So if it's 15-minute charts, you want to see it break out, stay above a level, kind of like we did here for 45 minutes, and then push through. If you see this kind of stuff where you break through new levels, you get indecision, 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 that tells you that you should not be that active because the picture is not clear. When you have 45 minutes of opening and closing in the same price action, which actually if you take it to most of the rest of these 15-minute candles, there was indecision a good majority of the 15-minute windows today. So what we're going to do now is we're going to take a step back. We're going to look at tech. We're going to look at tech. We're going to look at oil equipment, oil integrated, metals, financials, and the ag stocks, just to get a picture. I have a big list of stocks that I use primarily as an indicator, intraday and day-to-day, to say the majority of stocks are strong or weak or mixed. Today, very, very mixed. And again, if I could pull that list into the screen real quick just to give you an idea, that's basically the list that I feed off of every day. And you can see from the open versus from the close, just a slight nod to possibly from the open it was a little bit stronger, but again, only by 20 cents, 10 cents, 20 cents, so nothing that phenomenal. But let's start out with the big stock that everybody's got their eye on, as they should, Apple. What are you seeing here in Apple? I know Scott was tweeting a little bit this morning and talking about in the VTF that we need to see signs that the downside pressure might be subsiding to possibly make a tactical long. Apple pushed down, again, another doji indecision, opening and closing in the same area. It did close positive today, so that's a sign that the selling might have subsided. So you have some really clean levels to possibly be looking at that. You have an inside day today. You have a higher low from Friday's low, and you also have the 200 EMA as support. So you have a lot of reasons to believe that the downside in Apple might have lightened up a little bit at this level. Getting into some of the other tech stocks, Google, absolutely nothing to do here other than guess which direction it's going to break out of. In my opinion right now, there's no compelling reason to be long, and the short side does make a little bit more sense. So again, if you're a buy-side trader and you want to stay away from the short side, leave Google alone until it can get back above these most recent levels. Looks like it's got to get above the 700 level. Moving over to Intel, we're going to work our way right down. Still flagging on this one. All the key moving averages are in the right order. 8's below the 21, 21's below the 50, all below the 200. This stock looks better. Now, again, the average true range in the stock, not that great, but it still is one of the leaders in the sector. Moving over to Microsoft. Microsoft's interesting. Depending on what you read about this Surface tablet, a lot of people right now are not realizing that it has a Windows software on there, but it's a new software that is not compatible with most of the stuff you can use on your desktop. So got a little bit of a $1.50, $2 pop on this stock the last few days. Matter of fact, we've got a decent gap here. But now we're moving into what you can clearly see here, this 29.50, 29.75 level on the charts is resistance, as well as moving averages up in here. So we're coming up to some resistance up there and 2 days of indecision. You can see the two dojis there. IBM actually bounced back fairly nicely today, but again, if we go out to the hourly charts, this is a really nice flag in a solid push down of $6, and we roughly bounced back what we said this morning. 50% retracements, the area you'd look for it to start to continue. 198 to 192 is $6. So half of that would be 3. 192 plus 3 is 195, and look at that like magic. Today's high was the 50% retracement level in this bear flag. If you like it long, you need to see it get above that 50% retracement level, and that's exactly where it stopped today. That's also how you set your targets. Okay, moving along, oil equipment today got a little bit of the selling subsided. Doesn't mean it's necessarily long, but you can see here in the USO, took out the last 20-day lows, pushed through there nicely. Inside day did not push lower. So very interesting setup here. If you shorted as a swing trade, looking for some follow-through and didn't get it today, make sure you're disciplined on your stops because the gap fill is up here at 32.75, a dollar higher. I still prefer the short side on this one. I like the inside day. If I wasn't long, I'd be looking for a short below the 2-day low here, which is at 31.23. So if you've been listening to a lot of the recaps that I do, I'm very big on noticing these consolidation patterns from one day to the next. Talked about that on Amazon last week, which we'll take a look at in a second. But inside day at a breakdown level, and you'll see what I mean over here in Amazon. Inside day, looking for a breakout. We got it, came right back into the range. Interesting in Amazon that it's not selling off once we got back above the 200. Moving along in that same sector, OIH. Same thing as USO. We've pushed down, made new lows, and another inside day today. BHI, Halliburton, and Schlumberger. If we go to the earlier time frames during the day, we had some really good, clean price action right out of the gate. And again, this is what you have to be careful with. We'll take a look at Baidu. When you're trading at a level that is obvious to everybody, especially after the stock has made a significant move to the downside, which you can see here, 47.50 down to 41.50. Not a monster move, but percentage-wise, that's a pretty good move. If everybody's watching the same breakdown level at 42 that took out on Friday, you have to be careful that you don't get this little bit of a short squeeze type action, which again, as we talk about a lot, short squeeze after a downtrend can be recognized in the price action as a faster move that moves very, very quickly out of the level, as opposed to a slow grinding move sideways or higher, which represents new buying. So if you see a short, fast move against a downtrend, that means a short covering. So how does that translate into a trade for you? That means that there is not new buying and the preceding downtrend to the short covering rally is still valid. So what you would be looking to do is reestablish a short position. So we got some intraday longs today, short covering rally. I still prefer the short side based on these daily charts. Moving along, going to oil integrated, we take a look at COP, choppy range, BP, same thing. And really what I'm trying to point out here, ExxonMobil, is CVX. CVX, out of those four stocks, what you should be looking for is relative strength or weakness. The first three were in trading ranges. CVX, nice bear flag last week, pushed down again, held a little support. Now it's right around the 200. CVX from a relative strength or weakness perspective. If you're looking to trade this sector, the biggest edge is a short sale in CVX. The other three are do nothing. Mark that down. You have to know where the edge is. Next, we'll move on metals and miners. CDE still holding above the 80 MA. First time today, it pushed below it. I still like this on the long side. Looks like this just below 30 was the buy level, and we're pulling back now. So somewhere between 29.70 and 30, I'd be looking for an intraday pattern to look to bid. Moving right along to GDX. GDX is broken. ABX gap down, monster day on Friday. We'll take a look at that chart in a second. And today we got some more follow through to the downside. So if you go out to a little bit longer time frame charts, which we can take a look at right now, go out to the monthlies. We did have a couple of nice months in a row, but again, like I always like to do because it's so easy to get stuck in technology, we are essentially going back for 3 years now. We're still stuck in this very, very tight trading range in the GDX. So not a lot. This is more of a multi-day to maybe 10-day type of a trade, but not necessarily a longer-term perspective. Contrast that with the GLD. GLD has been a little bit more obvious since we broke out of this pennant, which I know that Scott was all over for a long time. Very, very clean pennant. Perfect consolidation leading to the break from 156 to 174. Again, keeping with the technicals, very, very clean resistance at 174. Again, indecision there on the weekly chart. We've actually had a pretty decent pullback now. If we want to use, again, the Fibonacci levels to start to look for a spot where you might consider looking to bid, if we go down here, 157 to 174 is $17 from here to here. 50% of $17 is 8.5. So if we go from 174 minus 8.5, let's just do 8. We move down, and we are ballpark in the area, 167, 166, right down in this area where we'd be looking. So we've actually pushed down a little bit lower than where we might want to be looking to bid, and we got the gap down. So now if it pushes through the 50% level, the target area you're looking to buy or short sell, you stay away from it because that means it should not have gotten down to that level. So the GLD we're going to stay away from. You can't ignore the gap, can't ignore the follow through. So on that note, we're going to move over a little over to the financials. Again, Capital One. I want to run through all of them so we can get a decent picture here. Citigroup, notice it's still holding the 8. Same thing with Morgan Stanley. Same thing with Goldman Sachs. The financials from a relative strength perspective, you need to make a list now. Same as Chevron, CVX was a short sale. This stock and this sector and this area of the market, including, let's go over to some of the home builders. Toll Brothers popped a little bit, not quite as strong as some of the other ones. Lennar, okay, see what we're starting to do. We're starting to build a relative strength of which ones to turn to if the market holds. So we have Chevron on the downside, financials on the long side, and we have Lennar from the buying here, and $39 seems to be the level. So overall, in my opinion, at this particular moment, I think that the market has shown heavier volume on the downside. We have the election coming up, light volume pause. If you look at all the hourly charts, I don't believe the long side is a screaming long right now. I think that at best, if you know what your A trades look like, it'd be very, very hard to make an A long scenario from a market perspective. We just went over a few stocks that look good on the long side. Make sure you note them down. Make sure you put the levels. I really like that 39 in Lennar. And I will see you tomorrow for the morning call. Scott might actually be back tomorrow too. Have a great night, everybody.